So once again, my name is Tim Turzin. I'm the Senior Sales Executive here at LKCS, and I will be giving the webinar today. So today what we're going to be talking about is credit-based marketing, okay? And really how to use credit data from the credit bureaus to really open doors, to kind of get more opportunity, get that low-hanging fruit, find loans that you can get into, your institution. So first, we always like to start off and tell everybody a little bit about LKCS for those that are not familiar with us. So LKCS is a full service marketing company. We have been in business since 1961, and we have a variety of products and services that we offer financial institutions. So you can kind of see the screen, a lot of different things that we can offer, and they all kind of tie into one another. Again, today we're going to focus on that credit-based marketing and how to use credit data. But again, we have a lot of other stuff. And if there's anything that interests you or any questions, feel free to reach out to myself or any of our other sales reps after. We can definitely talk about anything else that you might be interested in. So when we talk about credit-based marketing, what we're really talking about is pre-screen data, okay? And what that is basically getting targeted data that's available to you for refinance offers and new loan acquisitions, all right? So really everything's on the table. We can look for new auto loans, new mortgage loans, any type of HELOC or home equity loans, any type of auto or mortgage refinance opportunities, credit cards or balance transfer opportunities, or personal loans. We have access to basically all of that. Right? So anything you're looking for, anything that you kind of sets you apart in your market between rates or what you can do or what you can offer, there's a way to target for it, okay? We'll get into the hows and everything as we go. So when we talk about credit prospecting, I want to make sure everybody's on the same page of what we're talking about and what credit prospecting actually is. So what we call credit prospecting, it's a proactive marketing tool that targets account holders and or prospects. So you can target, current account holders or people that live in your areas or people that you want to target that don't currently do business with you. All right, we're going to use prospecting to target any type of refinance opportunity. So targeting, your account holders that have loans elsewhere, or people, that don't do business with you that have loans elsewhere. Or we can target brand new loan opportunities. So people that meet all the qualification criteria for a specific loan or product or service that currently do not have that anywhere. And again, everything we're going to be talking about today is based on actual credit bureau data. So everything's going right through the credit bureaus, and we're getting the data directly from them. So when we talk about using credit bureau data, again, we purchase data directly through any of the credit bureaus that you might want to use. So we actually have relationships that enable us to provide data from all of the bureaus. All right, and everybody asks, well, why would I want to use more than one bureau, or is there a reason why? And the big reason is not all of the bureaus have information on everybody. Okay, it's important to source the data out to multiple bureaus. And what I mean by that is most places only provide data to one, maybe two bureaus, but rarely are all three being used. Also, as people are applying for loans or doing different things, it's going typically to one bureau, right off the bat. So obviously the other bureaus are going to get that data, but it's going to take several weeks for them to update their records. So by utilizing multiple bureaus and pulling in data from all sources, we're getting the latest and greatest. We're making sure that we're making the right offer and looking at the right data points as soon as we have them. All right, we actually see up to a 70% increase in the leads when pulling data from all three as opposed to just one. So you're not limiting yourself to just one bureau. By utilizing them all, you're going to get more leads. And the biggest thing with LKCS is there is no additional cost to obtain that data from multiple bureaus. So it's going to cost you the same whether you use one, two, or three. So it's always better to use more. So this slide here is just showing you what we call our incremental lift. All right. So when we set bureaus and how you pick the credit bureaus, you're able to prioritize which bureaus you want to work with. So if we're going to work with all three and you prefer to work with, say, TransUnion, we're going to use TransUnion first. Everything is going to go through them first and foremost, unless they don't have data or it's incomplete or whatever it might be, and then it will go to your second choice, maybe Equifax, and your third choice, maybe that's Experian, okay? But by using all three, we're getting that power of what we call that incremental lift, and you're going to get more leads. Obviously, the more leads you get, the more opportunities you have to close loans, the more opportunity you have to make money, okay? So from 1 to 2 bureaus, you're looking at about a 40% jump, and then 1 to 3, about a 70% jump. So it's a big deal. Not only can we get data from the bureaus, right? We're actually going to subset or pull in other points of data from other sources. So while yes, it's great to pinpoint on all of that credit data, we can look at a lot more than just credit data to get a better picture and a better idea of who we want to target and what we want to do. So this slide here is just showing the different areas that we're pulling credit data from, right? So obviously the one right at the top middle will go around clockwise there. Tri-bureau credit, so we're pulling in information from the credit bureaus. The credit triggers also coming in from the credit bureaus. But then we start looking at demographic information, and that's going to be coming in from Axiom. Property information for homeowners, which is coming in from your county deeds, county records type stuff. Automotive information coming from your dealerships and different things like that. We're looking at automated valuation models for home value, so we actually can calculate the LTV. We're using the hedonic index for that, and then persistent responders for householding to figure out who's in households and all that type of stuff. So all in all, we have over 215 million consumers in our database and over 1,100 data points that we can use to target. So again, you can literally use anything and everything that you can think of to kind of target and work, on this data to really pinpoint who we want to go after for specific loans or for specific items. All right. So when we use credit data, first and foremost, and I like to point this out, and I can't stress it enough, is you get to specify your lending guidelines. Okay. You only have to market to the prospects or account holders that meet your specific credit criteria, which could be FICO score, LTV, credit history, and more, okay? Other places that do this, they'll give you 5 selects, maybe 10. You really can't stray too far outside the box. We don't like you to kind of be painted in a corner, so we're going to let you pick whatever you want. Obviously, we're here to help. We will make sure and make suggestions and tell you what we see working or not working or whatever it might be. But for the most part, you're going to use your lending guidelines, what you're most comfortable with, to make sure you're happy with the data you're getting back. When we use credit data, though, we have to do what they call a firm offer of credit. All right, so we can only use this credit data when we're doing that firm offer of credit, and I'll talk about that a little bit more in a second here. Everything we do has to be compliant with the Fair Credit Reporting Act. And the big takeaway from those two things is LKCS is going to help you, right? We're not going to leave you alone to the wolves there and fight that compliance monster yourself. We're here to help. We'll go over it with you. We'll give you the best practices. We'll give you, samples and guides and all that good stuff to make sure that everything is safe and fair before, we do anything. So a little bit more about that firm offer of credit and really what it is, all right? Number one, we have to indicate that the recipient is pre-selected, pre-screened, pre-approved, or pre-qualified. One of those 4 terms has to be used. All right, and people say, well, we don't think pre-screen is the same as pre-approved. In this scenario, it is. So all 4 of those words or those terms mean the exact same thing in the eyes of the credit bureaus. So you can use whichever one you're comfortable with. But in reality, they're all the same meaning, I guess, for what we're doing, okay? Number 2, there are going to be terms and conditions or eligibility requirements. We have to list them, all right? So in the disclosure somewhere, we're going to tell that person, based on A, B, and C, you've been pre-qualified for, this product or service, okay? We are also going to include information in that disclosure on why credit may not be extended after all. So just because we're doing a pre-approval or this pre-screen or whatever you want to use does not mean that they are guaranteed those funds. And you are going to basically put that in the disclosure that they are still going to have to come in. They still have to fill out, a normal credit application with you. You're going to go through your normal channels. And if anything changed from when we pulled the data to when you actually get, them to fill out an application or move forward, you can deny them that loan. All right. So what we're doing is we're giving them a very good chance that they'll be pre-approved and they'll get this money, 99.9% chance, but things change. You still have final say when they come in. So we're not locking you into anything. We're just, again, pre-approving them. Most likely, yes, they will be approved and it'll all go smooth, but there are outliers that things change, something happened, whatever it might be, but you do not have to give out those loans, okay? We have to list a minimum dollar amount for which that recipient has been, pre-qualified. So something like, hey, you've been, approved for at least, a $10,000 auto loan or something like that. That minimum dollar amount does not have to be in the main copy. It can be in the disclosures as well. So the main copy could say, hey, you're pre-approved for up to, say, a $50,000 auto loan. And then in the disclosure, just has to say, hey, the minimum amount is $5,000 or whatever it might be. And then we're going to list all of the opt-out notice and disclosure information for compliance reasons, so people can get out of receiving those credit-based, marketing pieces if they want to. All right. So all of those things have to go into whatever collateral it may be that we're going to send out, whether it be, direct mail, email, telemarketing script, whatever it is. All of that stuff has to be covered. And again, we will help you with all that. You're not going to be on your own. So credit prospecting campaigns. So we're going to get into a little bit of how to use this data now. So basically, we're going to extend pre-approved offers of credit to account holders and or non-account holders based on actual credit information, okay? You're going to set the criteria to identify those people that will qualify for a loan offer based on your specific requirements. Once again, this is your criteria, your requirements. It is customized to you. We are then going to send out a direct mail piece, do an email offer. If you're an LKCS statement client, we can do a statement letter or statement-based campaign, which we can get into a little bit later here. Or you can make outbound phone calls to those qualified account holders or non-account holders, as they come in. All right. So I want to be clear there. LKCS can help with everything there except the outbound phone calls. All right. We will help you come up with a script if needed, but we would not make phone calls on your behalf. That would be something that you would do on your end, your call center, or whatever it might be. We do also have a system called our DataFlex reporting engine that will help you measure the results of those campaigns if you need it. We've done some webinars on our DataFlex service before. If you haven't seen that, go to our YouTube channel, check that out. If you're interested in that, let me know. Basically, it's an MCIF alternative system, a really great tool, really will help you track and kind of manage all your different marketing campaigns, not just this one. So we're going to get into a couple potential prospecting campaigns. All right, so ways to leverage credit data to generate actual loans. What I'm going to show you are just examples. Right? These are quick examples that we've made up. So go ahead and be creative and brainstorm campaigns that make sense, for you and your institution, and adjust these parameters as needed. Again, these are just samples, so adjust whatever you think you might need to fit, your lending guidelines and goals. All right. So 2 examples on the screen are both auto refinance opportunities. So the one on the left is a lease expiration campaign. In this scenario, I'm going to look for people that have a FICO score of 640 and above. They do not have any late payments currently, and they do not have any repossessions, on their record. I'm going to look and make sure they have a current lease, and that leased vehicle ends. So that term on that lease ends in the next 1 to 3 months. All right. These people have a leased vehicle. They're going to be turning that lease back in the next 3 months. I promise they are in the market for another vehicle right now. So this is the time we can get those leads, get in front of them, pre-approve them for whatever it might be, let them know why it's better to buy than lease, whatever angle you want to play. We know they're in the market, they're actively looking, they're going to do something. They're not going to turn in their lease vehicle and start, riding their bike, okay? On the right-hand side, straight loan payoff, straight, refinance opportunity. Again, I'm going to look for people, say, with FICO scores of 640 and above. I'm going to exclude auto late payments or repossessions. I'm going to look for people that have a current loan balance of, say, greater than $5,000. All right, and I want to make sure there's a little bit of money left that if I'm going to refinance, I'm going to make something on it. We can also look for a minimum savings on their monthly payment. All right, so we can basically get the data, do some calculations, and then we can cherry pick the ones that we're going to save money on. So if you tell us, hey, we want to make sure that we're going to save everybody $25 a month, we can do that. We can guarantee that your rate at your term for what they currently have, we can compare them and make sure that you can save them money. All right. So those are things we can do on the auto side. Obviously, there's more things, 2 examples. A couple other campaigns on the left, looking at a credit card balance transfer. All right. I'm going to look for people that have a FICO score of, say, 620 and up. I'm going to look that they have a revolving balance above, say, $10,000. Looking for people that are using between 30 and 70% of their credit limit. So we can kind of see that available limit and see kind of where they're falling, and make sure they have no current late payments. Right? So I'm going to take that information and we're going to offer, a balance transfer, maybe if it's a personal loan, okay, whatever you want to do with that. There's some ideas there. On the right-hand side, looking for a conventional mortgage refinance. Right? In this case, we're going to look for people with FICO score of, say, 680 and above. People that have a mortgage balance over $100,000. They do not have an FHA, VA, or reverse mortgage currently. And let's say the age of their loan is at least 24 months old. Okay, so obviously everybody knows that mortgage rates, kind of dove pretty low here the last, 24 months or so. So if they haven't refinanced in the last 2 years, there's pretty good chance that you're going to beat that rate, which in turn will save them money. And then we can look up to, say, 95% LTV or whatever it is, that you wanted to do. All right. That payment savings example that I talked about on the auto side, we could also do it on the mortgage side. I didn't put it here, but that is something that can be done. So we can guarantee you're going to save them money on the mortgage as well. So a lot of different things you can do, a lot of different ways you can play with the data to really cherry pick and look, right, for the best opportunities. So again, you can use this for your current account holders or non-account holders, right, that you're trying to bring in. Obviously, the current account holders, if they have loans elsewhere, but they do other business with you, they're probably easier to convert, right? They already know who you are. They already do business with you. So that's really the low-hanging fruit that you can bring in. But obviously, if you're going to save people money, everybody's looking to save money, especially, in the last year with everything going on with the economy. If you can save somebody, $25, $50 a month on certain things, they're probably going to do it. So again, a lot of different ways we can look at it there. Ways you can get this out. All right, so get your message out in front of people. As I said, LKCS can help with any direct mail, email, or statement-based type campaign. This is an example of a direct mailer. So it could be a postcard size, it could be a self-mailer, so it's larger, that folds down, whatever you want it to be. But basically, it's going to let them know that they're pre-approved for X, Y, and Z. Everything we would do would be what we call variable data print, meaning that every single piece is custom to that person. So the pre-qualified amount is going to change based on person. We can change where to apply, the phone number, which branch they're closest to, you name it. The data is going to change for each individual person. It's pretty cool stuff. So again, a direct mail is something we can do. We can design, print, mail, do everything right from here. for you. You can do a letter, so same thing as the direct mail type postcard or self-mailer, but the normal personalized letter is just a letter that's going to go in a number 10 window envelope and go out. On the right side, you're seeing what we call a statement cover letter. So if you utilize LKCS for your statements, this is something that you have available to you right now. Basically, we're going to take the first page of your statement and turn it into that pre-approved letter, pre-approved campaign. Your statement data will just fall behind right on page 2, as it normally is. So you're going to save money instead of having to do a separate mailing with postage and everything else. We're going to piggyback it right with your printed statements, or that would be the first page of the e-statement. So your e-statement members or account holders would still see that offer when they logged in to look at their e-statement. So another way we can help you out there. And again, we can handle everything from start to finish there. And then obviously email marketing. So if you have the email addresses, and I want to be clear here, we do not purchase email addresses for non-account holders. Okay, so you would only be able to do this email if you have their email already. So they would have to be a current account holder that you have an email for to do this, but we can do email, all right? And again, we can set that up, everything will be variable inside of that, and we can handle that for you on our end as well. There is another option, again, that telemarketing type option. So you'd make phone calls. We can help with those scripts, but again, we do not make the phone calls on your behalf. All right. So what's the cost? Unfortunately, there's too many variables for me to give you specific costs on the credit prospecting service today on the webinar. There's, again, just too many things to look at, but I will go over the factors, okay? So number one is the number of records purchased. How many records are you purchasing at once? Are you using any of the other demographic selects? All right, so like I said, I can get all the credit data, and then we can supplement that credit data with a bunch of other demographics. So if we're looking at those other things, how many other things are we looking at? What are we using, and what do those cost? The credit bureaus do have a minimum charge for us to pull data. It's a monthly minimum. It is honestly not that bad. If anybody's ever talked to the bureau or went straight through them, typically it's about a third of the cost is going directly to a bureau, and the reason being we have more data to send to them as a company because we work with so many financial institutions, then you can bring it to them yourself, so we get better discounts, okay? And then there are setup charges to kind of do all the paperwork to get you, ready to use credit data. So those 4 things, a lot of variables. Hard to say exactly what this would cost you. But again, if you've ever talked directly to a bureau before, it's about a third of the cost. So you would save definitely some money kind of coming through a company like LKCS. But what I can do for you is run a free list count and estimate for anybody that needs it at any time. All right. So if you get a hold of me or any of the other LKCS sales reps, after the webinar and you're interested in something, let us know what type of campaign you're thinking about. Give us some info. We'll go back and forth with you. We'll figure out a rough idea. We can get into the system. We can run some rough ideas, some rough counts to determine the feasibility and cost of that campaign. So we can tell you exactly what's out there for you and exactly what it would cost to execute a campaign. That way you're getting, pricing that's accurate to you rather than, rough numbers and estimates that really don't mean too much. So again, that free list count and estimates available to everybody. Get a hold of myself, Tim, or any rep here at LKCS, and we'd be able to help you out. All right. Now, there is a second side of the credit world that I want to touch on, and I'm just going to touch on it briefly for everybody, okay? And it's called credit alerting, okay? So we've talked about credit prospecting and how credit prospecting kind of works and what you can do with that. But I want to just touch on that credit alerting service just so everybody knows it's out there. What we've talked about, credit prospecting, that is a proactive marketing tool that's going to target your account holders and or prospects who already have a loan or have a potential to buy. So you're being proactive, looking for refinance opportunities, or looking for people that could potentially have a new loan opportunity. Credit alerting is a little bit different. It is a reactive marketing strategy that targets your current account holders who are actively in the market for a loan product. Okay, so what I mean by this is people that are out there looking for a loan today, we would know about it and then reactively let you know that somebody's out there looking so you can take action. All right, so you can try to keep that loan rather than it going to a competitor off the bat. So how it happens, how it really kind of works. And again, this is just a brief overview. Whenever an account holder applies for credit anywhere, an inquiry gets posted to their credit file. All of the inquiries are categorized according to the type of product that person is looking for. So we know that they have applied for a mortgage loan, auto loan, installment loan, credit card, whatever it might be. We know about it. We would keep basically a database of your account holders on file. And we would cross-reference your account holders daily with the credit bureau's leads. So we would basically look at all those inquiries that are coming in from the credit bureaus and compare them every day. Anytime we saw basically a match, we would pull it out and look at it a little bit further. All right, first we're going to look at what product are they in the market for. They're in the market for that mortgage loan, auto loan, credit card. Okay. Once we know that, then we would look and see what your criteria is for that product. So if they're in the market for a mortgage loan, what's your mortgage criteria? 660 FICO score, no current late payments, no foreclosures, whatever it might be. If they meet your criteria, we give them to you as a lead. So then you can follow up with them immediately. If they don't meet your criteria, we're just going to ignore them like it never happened. Okay. Again, this is basically every day we're doing this. So people that are applying, on Monday, we know Tuesday, we know Wednesday, Thursday, Friday, or Thursday, Friday, and then everybody on Friday, Saturday, we find about on Monday. So we're kind of doing it every night. We're compiling everything and getting that data to you first thing in the morning for the day prior. LKCS can help deliver any direct mail or email same day. So the day we get the leads, we're basically getting them out there. Okay, so if you need help with that, we can do that, and we do get them out the exact same day. You get to select what categories and what inquiries you want to target. So if you're only interested in mortgage loans, that's all you have to look at. If you're only interested in auto loans, that's all we have to look at. All right, or you can mix and match however it is that you want to. As I said, the leads are screened using your qualification criteria. All right, and again, that criteria can be based on anything and everything you want. If you want, you can also have subsets of criteria. Okay, so what I mean by that is if you have two mortgage products, maybe mortgage product A and mortgage product B. Mortgage product A is harder to get into, so we're going to look at their credit score. No, they don't fit mortgage product A. Let's see if they fit mortgage product B before we ignore them. Okay, so you can do things like that. And again, we're going to get daily alerts. It's going to come in one file that we're going to get to you, and it's going to contain information from all bureaus. So any bureau that you're working with, all the data is going to be right there. All right. Again, we provide you those lists. We're able to fulfill the direct mail or email same day, or get those lists to your call center or whatever it might be, so they can jump on it same day. All right. So what's the cost for the credit alerting? Again, it's hard to say without basically knowing exactly what we're looking at. But the two main things that we're looking at here is the number of people that we're monitoring, basically. So number of account holders that we're kind of looking at to screen each month. I will tell everybody, I will be upfront and honest. The minimum that we want to kind of do for this type of program would be 10,000 people per month. Okay, so we'd want to monitor at least 10,000 people, or the cost and kind of how it all works. We've kind of broke it down. Under 10,000, it's hard to get a really good ROI back. So we do recommend, again, that 10,000 and up to make sure you're getting a good ROI on this particular product. And then there are some setup charges to get everything going. So depending on what you're doing, we'd have to figure that out. Just like the prospecting, I can get you an idea of cost if you reach out after the webinar. What I can do is talk to you a little bit, and then we can do what we call a free opportunity analysis, where we would get a file from you. We would look backwards 30 days. So we would look basically over the previous month, how many people on your particular file were in the market for mortgages, auto loans, credit cards, etc. So we would tell you who was in the market, and if you give us some criteria, we'll tell you who would have met your criteria. That way you can get an idea and know exactly how many leads you can expect roughly each month for each particular product or service, and then we can make some assumptions on, the ROI there. All right, so this is just a quick case study. All right, looking at mortgages only, average loan size of $150,000 with a front and back end revenue of 2.5% to 3%. All right, how many people we're monitoring each month? 15,000, 50,000, or 100,000. I just broke it into 3 rough categories here. I'm looking at a 1% trigger rate per month. 1% that meets your criteria. So they're in the market and they meet your criteria every month. I will tell you from experience, 1% is pretty low. So these are low numbers, but I rather look at the low end and the high end. So at 1%, you're getting 150 mortgage leads, 500 mortgage leads, or 1,000 mortgage leads, depending on how many people we're looking at. Contact rate. Obviously, with the pre-approvals and all that, we have to contact everybody. But we're also realists here, and we know that not everybody's going to look at the mail piece, open the email, or take your phone call, right? So we're going to say the contact rate is 30%. 30% of the people are actually going to pay attention to the offer, okay? And then a contact to close rate. So out of the 30% that are actually looking at the offer and are interested in the offer, we're going to get 10% of those people to actually close. All right, so that's going to give you 5, 15, or 30 new mortgages every single month on a revenue over the course of the life of those mortgages would be over $20,000, $60,000, or $120,000, depending. Estimated, this is rough estimated costs of $1,800 a month, $3,750, or $5,500. You're basically going to get back $12 for every dollar spent, 17 for every dollar, 23 for every dollar on those rough costs. So right around there. So it is a good ROI if you're monitoring enough people. Again, this is mortgages only. So when you add, auto loans or credit cards or anything else, these numbers go up, rather quickly for the ROI. So again, if you're interested in the credit alerting, reach out to myself or any of the other reps here after, and we can discuss this a little bit more and get you some more firm pricing. Let's kind of look at that a little bit further. All right, that is everything I have for everybody today. Again, I'd like to thank you all for joining the webinar. Listen to me talk for a little bit. If you have any questions, comments, concerns, my contact information is there on the screen, so please feel free to shoot me an email or give me a call. I will stay on the line, so if anybody wants to type in any questions in the GoToWebinar toolbar, I'll be happy to stay on for the next few minutes and answer anything that comes through. Otherwise, everybody have a great day and enjoy the rest of July. Thank you.